Domestically, things are all right. And let's get all these fake free traders off their high horse. Did not the president reach out to the G7 and say, let's drop all tariffs across the board? And was not the G7 crickets, silence?
Well, hold on. But
wait, if the playing field is fair, we don't want to go there?
It started long before that. He imposed steel and aluminum tariffs well before G7.
But weren't there already tariffs coming this way that were greater than tariffs that were going that way? Well, is not the president's actions simply retaliation?
No. I mean, if he wanted to retaliate against China, he could have done it with his allies. That's not what he's done.
But they're not coming because they're chicken spit, if you know what I'm saying.
Well, I don't know if,
listen, as a trader, let's get off my political soapbox. As a trader, there's broad pin action, okay? The industrials come in hard. What do? You identify where there shouldn't be such a discount. Where's that? That's defense, because there's a little blood in the water, and because there's going to be a United States Space Force. At least we think there might be. So what do you do on a day like this? You buy Boeing when everybody's selling it. You buy Raytheon when everybody's selling it. You buy Northrop when everybody's selling it. You brought in those positions. You sell puts accordingly at levels much lower, so you get a little premium and take a little discount for yourself. And then we have C-Car later in the week. So what do? Those stocks are down too. So you buy Goldman. Lloyd Blankfein was just on, so that put that in my head. But I bought Goldman twice today. I didn't buy any Citi because I'm kind of a little upset with them. But I went out and I bought JP Morgan as well. And I also have those coordinated puts.
Jim, so Sarge isn't concerned about the escalating trade battle. What about you for the broader markets?
Well, I think what's going to happen is the U.S. is going to win, and the markets are suggesting that too. What happened to the Chinese stock market last night? It was down almost 4%. What's happening to our market today? It's down 0.4% on the S&P. Right now, the markets are all looking like if there's a protracted trade war, China comes out on the losing end until the time that they decide to come to the table and start discussing it with us. They do hold a nuclear option. They could sell their $1 trillion worth of treasuries. They could devalue their currency. But neither of those markets are acting like that's a viable option right now. So for the moment, the president seems to have all of the cards, and the Chinese are trying to play along. And even Lloyd Blankfein said that in your quote, too, that he has a better negotiating position than the Chinese. And I think that that's why the markets have not taken this trade war talk nearly as worrisome as a lot of political commentators have.
You know, Rich, we also had the Chinese, I think, injecting some liquidity overnight, so they're clearly concerned a little bit about what's going on in the markets. And then you also had the action from the U.S. against ZTE, which is another blow for them. So what do you think that all means? Does it drive more capital into the U.S. as people think, well, maybe, you know, in China in particular, but it's not so attractive, but drives people here, do you think?
Yeah, I think, Kelly, if you look at fundamentals around the world, there is no question the U.S. economy is the shining star. That's really been true off and on for quite some time, but it's definitely true now as the coordinated global recovery that everybody used to talk about is actually fraying. I think that was a great story for 2016 into 2017. I think it's a very old story now, the coordinated global recovery. But I think this is also a forest and trees type issue where everybody's focused on trade and they're missing the much bigger issue about what's going on. You look over the last 3 or 4 months, almost every sizable sell-off that we've had has come from pro-inflation policy coming from Washington. And I think that's what people are missing here, is that there is a major sea change going on in the backdrop where we're going from a disinflationary environment to an inflationary environment. We have tight labor markets. We have tight product markets because the economy is strong. We just got tax cuts on top of that. We're now getting fiscal spending, right? Fiscal stimulus is up 6% year on year. Now we're getting trade and we're getting immigration restrictions. These are all pro-inflation policies. And I think that's the big issue in the background here that the market's having trouble with.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.